Hey, so we all know that interest rates are rising, that the market is softening, and there is certainly a shift happening. So, what is actually happening in the Northern Virginia real estate market? Stay tuned and find out. My name is Sean Price. I am with Price and Price Group here at eXp Realty, and I know that it's been a couple weeks since we've done this market report. So we're going to go over what's happened in the last 21 days with statistics specific to the last 7 days. But I just want to let you know what the general overall pulse of the market is. In general, what's been happening is we are seeing the number of buyer related calls that we have are going down. There still are buyers that are purchasing homes. We've been putting buyers under contract every week for the last couple weeks. The good news is that for buyers, right now they are able to get into properties within a normal range of the asking price as long as the property is priced appropriately. If properties are priced too high, they're actually getting them at a little bit of a discount. So that's kind of a misconception that people are having right now, is that they're seeing prices on the internet start to drop a little bit and they're feeling like their prices are coming down. But what's actually happening is that there are sellers that are coming onto the market now because they know that the market's shifting, so they feel like they might have missed the boat. So they're kind of rushing to the market and they're coming with price points to see what they can get, to see, how much can they sell their house for, and they have these unrealistic price points. And what will end up happening is you'll have a property that sold, let's say a $500,000 property that sold, um, 4 weeks ago. And normally, what would have been happening in the last 6 months is you would take a $500,000 property and they would put it on the market for 515, 520,000, and it would still bid up higher. So what a lot of sellers that are doing right now, and some agents that aren't realizing that the shift has happened, is they're taking that $500,000 value of a property and they're putting it on at 510, 515, 520, and it's sitting because buyers aren't, the competition isn't there. So the property sits and then it starts coming down. And as it gets closer to that $500,000 mark, that's when it sells. So properties are still selling, but they're selling closer to what their value is. They're not selling for 15, 20, 30% above market value. With that being said, we do have some that are going above ask. If they're priced appropriately and their condition is good and they go onto the market and they're marketed appropriately, we are still getting multiple offers and we are seeing properties go above ask. But that is becoming more of the exception, and it's only for appropriately priced properties that are in great condition. So that's kind of the pulse of the market. So from a seller's perspective, you just have to be very specific, very strategic. You have to know what the value of the property is. You have to know what the comps are. You have to know what your competition is, and you can't just put anything on the market and expect it to sell like hotcakes. You have to price it appropriately. You have to put it in the best condition you can if you want top dollar. If you don't put it in the best condition that you can, you need to be willing to drop that price to where it's priced appropriately. So that's the seller side of it. The good news is it's still a good time to sell. We just sold a house out in Manassas. Within 3 days, we had 3 offers on it and went $50,000 above ask, and we had a backup offer that was at the same price point. So it is still a great time to sell. You just have to be a lot more strategic, and you have to have a good, strong agent that knows how to market. So on the buy side of the market, what we're seeing with buyers is that they are able to get into properties. They're still battling multiple offers on occasion, actually quite usually. But what's ended up happening is they're battling multiple offers, but they're a lot closer to the asking price. In fact, we've actually been into a couple multi-offer situations where we've gotten the property at ask. So we're starting to see that happen, and buyers are having a good opportunity with that right now. So one of the things to keep in mind is the interest rates are the thing that calmed this market down, because people kind of got scared by the interest rate and they pulled back. And so what's going to end up happening is buyers that are getting these properties right now without this large amount of competition. We have a saying in real estate: you marry the property, but you date the interest rate. So when interest rates come back around, whether it's 6 months from now, or even if it's a year, 2 years, 3 years down the road, then you can always refinance the house, and you've got the house at a better property. You've hedged against inflation because you have a real asset which will protect you against the negative effects of inflation. And then when the interest rates do become a little bit more reasonable, which they're not unreasonable now. I mean, 6% is still within the range of normal if you look at the history of interest rates. It's just we got into a really unique situation over the last couple of years. But anyway, I digress. Anyway, when the interest rates do start to maybe come back down to the fours or possibly the threes, then you could always refinance. So you date the interest rate, but you marry the property. So that's one thing to consider, is you can get into these properties without multiple offers. Now, do we expect the market to continue to soften? Probably, because the interest rates, they are talking about it going up another 0.75% to 1% in July. So that's going to soften the market even further. Do we expect a crash? There's a lot of mixed reviews out there. In fact, I'm going to do a very detailed video over the statistics. I'm going to give you a mind map flow chart approach so you can decide for yourself what you think the market's going to do. I am not going to jump on the bandwagon and say yes, the market is going to crash, or no, the market's not going to crash, because the truth is we don't know. This is a very unique situation. We have strong demand, we have lack of supply. A lot of people are pulling back right now and going into rentals, but the problem with that is going to be that rent rates are going up by 25%, and rent tends to trail sales by about a year or two. So those rent rates are going to do nothing but keep going up. So people aren't going to get a safe haven by going and renting, because those prices are going to keep going up. So I'm actually going to be shooting two different videos. One video is going to be a flowchart mind analysis to help you decide what you think is going to happen with the market. And then the other one's going to be, should you rent or buy? What are the positives and benefits of both? Because there are situations where it's better to rent. There are situations a lot where it's better to buy, but you just need to know what's right for your family. So I'm going to do some video education on that. So again, what we're seeing right now is still a good time to sell for sellers. Buyers, it's a good time to buy because interest rates are only going to keep going up. What we're seeing right now in the market, and I'm going to show you this graphically, is not a decrease in pricing. It's actually still slowly going up. It's just not 10, 15, 20% of what it was before. It's much more normal. It's 1%, 2%, 3% above ask. And so that appreciation we're anticipating should continue for a period. So take advantage of the interest rates right now while the appreciation has calmed down, and get the property without multiple offers, because as the interest rates go up, which we expect them to, affordability is going to come down. So those are the positions right now. Again, I'm not going to predict what's going to happen in the market. I have feedback and comments from people asking me, what do you think is going to happen? What do you think is going to happen? I get asked this question all the time. I have my feeling about what's going to happen, but I'm not going to try to predict it because nobody really knows. And the people that are putting stuff out there saying it's definitely going to crash, it's clickbait. We don't know that it's definitely going to crash. The people that are saying it's going to keep on going and keep on rising, it's clickbait. We don't know if it's going to keep on rising. So we just have to look at it, analyze it, and make a personal decision about what you think is going to happen in the market. The one thing that we do know is inventory is low, demand is still high. A lot of that demand is flowing into the rental market right now, which is already showing that it's starting to increase by 10, 15, 20, 25% each time a lease renews. So we expect to see those numbers start going up. So rent is going to be unaffordable as well. So that's going to push people back into the buying side. So it's really hard to tell where this falls. Okay. All right. So a bit of a ramble. I apologize. Let's get into what we see with regards to the actual numbers. Okay. So you can see here the orange line is buyer activity and the blue line is inventory. And you can see over the last 7 days, both were down. Inventory was down 21% and buyer activity was down 16%, which is not uncommon. We tend to see that around the 4th of July weekend because nobody wants to put their property right on the market right before 4th of July because everybody's going out of town. So coming back down to the graph, we can see that over the last 3 weeks, because it's been 3 weeks since we ran the market report, you can see that buyer activity it had a spike and then it decreased a little bit, and then it came down. Inventory looked like it was going to go up for a little bit, and then it started coming down. So we're seeing inventory and buyer activity are still pretty much mirroring each other, which when that happens, you come over here to buyer's market versus seller's market. And again, it's just a very, very neutral market. It's not a strong buyer's market, and it's certainly not the strong seller's market that it used to be. But most properties are selling. It's just their days on the market depends on their condition and their pricing. So that's where we are right now. So we're just going to kind of keep on keeping an eye on it, seeing what's going on, seeing how the interest rates are affecting everything. We are going into the period that normally would be a seasonal slowdown because once we get into July, August portion of summer, the market does tend to slow down a little bit. It just hasn't since COVID because that was a unique situation. So it's going to be interesting to see what happens over the next couple months. Personally, I expect activity to slow down. I expect a continued softening of the market, but I really don't expect pricing to start coming down too significantly in the near future. What it's going to do long term, I don't know. I've got my theories, but I'm not going to put those out there. All right, so if you have any questions, please feel free to reach out to us, and also let me know if there's any subjects. This is kind of a volatile time right now, so if you have any questions that are kind of gnawing at you and you'd really like me to shoot a video on that topic, please let me know. Put it in the comments below. If you receive this video through an email, reply to me through the email. Just let me know what we can do for you. You can even text me or call me, number 703-424-5873. Okay, everybody have a great 4th of July, stay safe, and we will see you on next week's video.